All right, Candle Range Theory Trader back with you with a weekend review for what is this, September 1st through the 5th. So let's get into it. Now, moving forward for the foreseeable future of this channel, I'm only looking to trade specific patterns, either from a swing trading or day trading perspective. And I'm going to show you the patterns as well as the trades that took place for this week. And I'm going to just match them up just to show you how they look and show you as well that they don't always line up with the predetermined pattern, but the price action is still very similar. So the first one here is based on the Tuesday Classic expansion model. So that's this model right here, the short version. All right. So this, you see this chart right here, okay, where the weekly candle opens, it goes up and then goes down. Monday creates the initial high and low of the day and then tanks. So what I'll do is I'll isolate that. So this is where our candle range theory comes into play. Monday sets the high low of the day, the week rather. So I'm not trading that. I'm just letting it set up. So this is Monday's high. This is Monday's low. Like that, okay? That's Monday. Tuesday is when I actually trade. So notice right here on Tuesday, gave a beautiful entry. So let's drop down to our 15-minute chart and see when the best time to enter would have been. Well, it's like around 3:45, 3:45, 4 o'clock. So if we took an entry there, short position with price going above the range and then closing back inside of it, like we like to see. Stop loss would have been a little high, like 30 pips or so. But let's see if we can still get at least a 1 to 3 from that. So if we do a 30 pip stop loss, we'd like to see a 90 pip take profit, which we did get right there. Okay, and we would have been out by Wednesday USA session. And then price did start to retrace some for the rest of the week through Friday. Okay, but that's that one right there. Okay, so let me just go back to the daily. Reset. All right. So, and the reason, or the way you know that you got it for sure when the day closes is that your entries should appear on a wick of a candle on the daily. So if our entry was right here at 4 o'clock a.m. Eastern Standard Time, and then we go back on the daily. Okay, see how it's in that wick there? But notice too, you see how I went for a 1 to 3? I didn't, well, I would have liked for price to keep going down. It did not, especially if it hits the prior week low. That's definitely a telltale sign to go ahead and get out. Okay, right there. Because as you can see here on the classic expansion model over here for the downside, while we would like to see price go down Tuesday, Wednesday, Thursday, and then consolidate on Friday, for this one, it went down Wednesday only, hit the prior week low, and then came back. All right, it came all the way back up to the entry. So you take what you can get out of these, you scale in, and take what you can get, and just be done with it. All right. So, but that was Euro Aussie. Let's see what's next here. If you hear any noise, sorry, that was my son or sons. But let's see here. Next up was Euro Aussie, or Pound Aussie rather. Another Tuesday. Now this was 2 for 1. So this one here had Tuesday classic expansion making the high of the week on the downside. So I based that on this. So let's do our candle range theory for Monday. We have Monday's high, Monday's low. We're not trading on Monday. We just let it play out. And then we look at our entry, 15-minute chart. Best entry would have been this was at 1:30 p.m. Well, no, I'm sorry, 1:30 a.m. Eastern Standard Time. Sometimes on the Aussie pairs, you'll get that. I'm not sure if this was news driven or not, but this one would have offered a real, looks like a better stop loss. Let me see. Yeah, we could have got away with like a 10 to 12 pip stop loss, a 10 pip stop loss on that. And let's see if we could have got a 1 to 5. Yeah, we could have got much more than that. Usually 1 to 10 is like my max. Can you get more? Yeah, but it gets to a point. So you could have got a 1 to 10 out of this one using that entry model. That's a 1 to 10 right there. It went down 100 pips. 10 pip stop loss. So you scale in right here best you can before this big drop comes right here at 3 o'clock. And that was gorgeous. Good move to the downside right there. Okay, so but that's based off of Monday's range, and it broke down below the prior week low. So, but once it hits prior week low, trading this model, I would look to go ahead and take, even though it did keep going. There's no guarantee that it's going to keep going or not. So, but this because this was a week at a glance in as well. It also gave us a midweek reversal long on Wednesday. So, real quick, we're going to reframe this. So, I'm going to get rid of the classic expansion. We're going to put the high here for candle range and the low here because this is Tuesday. Midweek reversals are based on Tuesday's range. And I'm going to show you like this. See right here, Tuesday's candle is right here. Wednesday creates the low of the week, closes inside or above Tuesday's range. And while we would like to see it expand all the way, it doesn't always do that. And it did not this time, but it did close inside of Tuesday's range and expand Thursday. So Thursday at a bare minimum is a good day to take profit on a midweek reversal. The best entry there on Wednesday would have been we wait for price to close inside the range. It would have been right here at about 10 o'clock on Wednesday. So if we took a long position right here at 10, could have got a 15 pip. We could have got a 1 to 5 on that one with a 15 pip take stop loss and a 75 pip take profit. That did hit on Thursday. It did go for a little more, but that was, like sometimes it just goes both ways. I don't look to trade both ways, but even if you miss the Thursday expansion, sometimes you'll just get a midweek reversal in the midst of that. And at the end of the day, the pair will end in the weekly chart will pretty much look like a doji because you see here where the week opened, spiked up, spiked down, and it closed right where it started. So it didn't really change for the week at all. So yeah, that's that one. But typically, I'm only looking for one. When I say one, I'm only looking for either a this or this, but I'm not looking for the pair to do both, to do expansion and a reversal all in the same week. I just noticed that, but that's not the norm. Typically, price just continues in the same direction. The rest of these were all midweek reversals. So real quick, let's just go through the best entries. I'll just mark the high on this one. This is Tuesday, so let me just make this the week here. So we have Monday, Tuesday, the high of the week being created on Wednesday. I hate I missed this trade, but I just did. So let's see. The best trading day was Wednesday. The entry was at. You had a couple opportunities, either around 10 at night, 11 o'clock at night, or around 3:30 in the morning for London. Getting in here. 15 pip stop loss. And let me see. Yeah, that definitely would have hit. Typically on midweek reversals, Thursday is your best day to cash out. But sometimes Fridays can be good as well if price continues to keep going. And in this case, it did. So it went down 177 pips. That's 1 to 11 risk to reward ratio. That would have been awesome. But you at least could have got a 1 to 5 or 1 to 10 there. But this price action, again, this midweek reversal, is based on this structure right here. Monday, Tuesday going up. Monday, Tuesday going up. Wednesday going up and then closing inside of Tuesday's range. Thursday didn't do much, and then Friday gave us that big expansion day. Canadian did also have news as well with the job numbers, so they just used the news as a catalyst to finish it and move on out. These rest of the yens are pretty much the same. We were at New Zealand. Yeah, the high here. Where price went up. Friday didn't do much, so Thursday would have been your best take profit day here. Same basic thing. I'm not going to go over these in detail, but you do see that. So mid reversal Monday, Tuesday up, and we base our entry on the fact that Wednesday made the high of the week, and then Thursday gave us the expansion to the downside. Let's see. Australian, I did take this trade based off the fact that the midweek reversal did happen on Wednesday. While it wasn't perfect, here's one thing that I do want to bring out. Sometimes price will close on Wednesday around the prior high of day, We like to see it close inside of it, but in this case, it only broke this high by about 4 pips. So it's not really fair to call that a break. So what I did was I used the fib, and I'm not big on fibs, but the reversal day Wednesday's range here. This is a little bit of an advanced strategy, but it's not that complicated. All it is this: you use this daily range of the reversal day, and if price goes above the 50% level, you can get in and expect price to continue to the downside and take what you can get. So you could have got trades here on Thursday or on Friday. See how they pinned it. So let's drop down to a lower time frame and see where we could have got in at. It was anywhere above this blue line here. This was above 50%. So you had the opportunity here and here in the London session, Friday 3:45 all the way to about really about 10 o'clock or so. I think I took my last entries here. I scaled in somewhere in here, and then price eventually tanked, and then that was pretty much it. So that was a good return on investment. So for midweek reversals, again, if you miss it and it retraces, just use a fib on the reversal day, Wednesday's range, and try to enter, and only enter if price comes back above the middle of this range. Otherwise, don't bother trading below the halfway point. Okay, and really, you don't even have to use a fib if you don't want to. You can also use this candle range high right here, because remember, this is the range high. So these people here were expecting to just be fooled into going long, but because we know the reversal took place on Wednesday, we're expecting these long people that buy up here to get destroyed because this is the peak formation high or high of the week, and price to just continue downward. And that's pretty much it. So now let's do some long examples and we'll be done. So again, these are the expansion candles that we're looking for based on this pattern here, where we let Monday create the initial high and low of the week, Tuesday to go down and then expand up. So we isolate our Monday high. Well, I'll just do the low because that's really all we're looking for. Okay, so this is Monday's low right here. Then Tuesday, we want to see create the low of the week, which it did, and then just expand up for the rest of the week. So we like to see Tuesday, it did close inside of Monday's range. It did come back a little bit, but then bang, bang, gave us a couple days of rise. So the best time frame to trade, or the best entry, would have been at on Tuesday. It gave you plenty of time to get in from on this retrace here from about 11:30 really onward. So we can just put our entry right there. So all the way from 11:30 through, goodness, I mean, London next session. It consolidated all night. So you had plenty of time to get in and then rose. So this was good for, you could have got 50 pips off of that. 1 to 5. Okay, on a basic classic expansion there. I'll reset that. There we go. Okay, but obviously it may have gone for more. Matter of fact, I believe it did. Yeah, it went for a lot more. Because remember the Canadian news, so it did go for like 1 to 10. But news is unpredictable. It could have just as easily gone down, so you never know. Okay, then Aussie Swiss, same deal. You had Monday's low, but this time price came back. So low of the week was created right here. Thursday would have been the best day to get out. I would not have treated this as a midweek reversal because it didn't close inside of Tuesday's range. This was just a class. It started as a classic expansion and then price just came back. So that was pretty much that. Let's see, and then we'll do a couple of midweek reversals on here and be done. Let's see. Matter of fact, yeah, we'll do this one. All right, so this was pound CAD. Low of the week was right here for Wednesday. So now we take a look at our perfect entry, which would have been at, I hate I missed this trade too. This did not give much time, but the entry would have been right here. Now this candle's open at 3:45 a.m. for London session. And that was it went over like 100 pips. Like this was just a monster move. Let me see. Yeah, this is a great midweek reversal. That's ideal. That went for 288 pips. See, and this is what you like to see. So you got Monday, Tuesday, Wednesday low of the week, just like right here. Monday, Tuesday, Wednesday creating the lower week, Thursday, Friday expanding to the upside. Thursday, Friday expanding to the upside, all the way back up to the prior week high right there. Once it hits prior week high, that's your max take profit if you want to do that. Doesn't always get there as I've shown, but that's how that went. But that was just a great trade. And then we'll do Euro to wrap it up. I'll show you New Zealand. That was another one. Friday did come back. I got a little bit of profit off this one, but I didn't take this reversal. But this was Tuesday's low. Okay, went below it, closed above it. Thursday would have been the best take profit there. But as you can see, this one did not reach the prior week high. Friday did retrace, so it happens. So Thursday again is the best take profit for midweek reversals. Let's see. So now we'll do a dollar pair. Let's do Euro to close it out. This was also non-farm. So they really held price on Thursday, and then Friday decided to expand up to destroy all the shorts. So obviously we have Monday, Tuesday, and then Wednesday creating the low of the week. The best entry would have been at right here at 345 because price dipped below the range, came back inside of it. We enter right there. Go back to the daily. And price went up 135 pips or so. So over the next 2 days. So Thursday was a chop day, but Friday really showed up and showed out. So those are the structures. But again, these are Tuesday expansions, okay, long and midweek reversals. All right. So I base all my trading off for the weekly, okay, for these two. We'll take a look at a couple of day trades and be done. I'll just see if I can find one. I'll pick one at random because, like I said, these are only swing trades. You're not looking to trade all. You only need one of these a week to be decent. But let's see. I'll pick a pair at random and see if I can just find a quick 3 candle pattern here on the 4-hour chart. That's my bread and butter. So from a day trading standpoint, being real quick here, I want to be sure we have the weekly open. Okay, right here. Just going to go through these, see if I can find one. I only trade London USA session. Matter of fact, just to make this quicker, let me do Wednesdays. Yeah, let's try this. There we go. And let me do this. And that'll make it much easier to see. There we go. All right, and perfect. This is one right here. Candle range high. Candle range low. Too easy. I did not take this trade, but just here's one. I'm not going to review every single trade, but guys, the pattern's in there over and over. It's just our job to find it. Here is the structure. 1, 2, 3. Ignore these days of the week. Okay, it's just a 3 candle pattern, but I do this pattern on a 4-hour chart. So, but the 4-hour chart has to coincide with my trading hours. 1, 5, 9, right here. 1 o'clock, 5 o'clock, 9 o'clock. So if this 5 o'clock candle right here creates the high of the day, then you're cleared to go short for the rest of the day for USA session. So let's take a look at a good entry on the 5-minute. Okay, price went above the range, closed back inside of it. You would have been good anywhere from, we'll just do this one. Pardon, from about 540 until about 650. But that chop right there is really ugly. So this is the ideal spot right here to be in. And then price just tanked. This would have given, from risk to reward standpoint, yeah, 50 pips easy. Okay, 1 to 5 right there. right, so that was that one. So again, I only look for these structures, guys. These are the only structures I trade. This or this for day trading. Two candle patterns or one candle patterns. I'll see if I can find a long example and we'll be done. So Swiss yen, let's see. Get rid of that. I'm gonna skip over the ones I marked. Nothing there. Nothing there. And if I don't see one, I just don't see one. But I mean, I think you guys get the point. Uh, let's see. Nope. Nope. Yeah, this works. This is perfect. Candle range high. Might not be a big return, but this is still the price action. Candle range low. All right, so 4 hour chart. Again, when you do these on a day from a day trade basis, you don't have to worry about bias or anything like that. This price action right here is this structure right here, except it's a long instead of a short. So you have your range, price goes below the range and then just wipes it out in one candle, in one 4 hour candle. So here's the range, price goes below it and then closes either inside of it or even above it. So let's take a look at our, this was what, Wednesday. Perfect entry would have been at, let's see, right here at 6 o'clock. Well, actually, no, let me go to a 5 minute. Um, Anywhere from 5:45 all the way up to about 6:50, anywhere in there. Let me see if we could have got like a one to maybe a 1 to 3 because New Zealand Swiss is not a very high ADR pair as you've seen. So even though those candles look pretty big, this was not a big move. So we'll just say a 1 to 2 for these day trading models. 1 to 2, 1 to 1.5 to 1 to 2 is ideal. So like if you did a 4 pip stop loss and a 12 pip take profit, that could have been 1 to 3, and that was from 6:50. Let's say about 6 o'clock, 6:50 to about 9 o'clock, because USA didn't do much but just chop around. So that's the 5 minute chart there. But this is still the price action. The main thing is the price action. This is the price action that you're looking for on the 4 hour chart when you're day trading. At least when I day trade, this is how I trade. So that's it. Like I said, I didn't want to go over every single pair. The pattern just repeats over and over and over. It's just your job to make it fit your schedule and know what you're looking for and know when you're wrong. And when you're wrong, you just admit it and get out. Okay, so that's it. All right, but I appreciate you watching. I appreciate your time and attention. Hope you have a great rest of your day.